Portfolio Builder members, this is your June 7th, Friday after the market close update. All three portfolios have had some record-breaking returns. Basic program is up thanks to the SPY ETF. Our Diamond Club is up 3% in the last several days. Since Tuesday, we went long this basket of stocks, and all of them are doing extremely well, except our banks are not doing quite as well, but they help diversify our portfolio and spread out the risk. And the Whale Club finally made the trigger to go long Amazon and Google with a very nice setup that generates profit in three directions. There's a small window of vulnerability between our covered call and the put option that we use half the profit from the covered call to purchase. But the Whale program has a very nice setup, trading Google and Amazon every Thursday now. Here's the top news and charts that I've collected since our morning update. And again, just a review of our program. Monday, Wednesday, Friday at noon Eastern, we do our trade alert where we buy the SPY ETF and sell call options to generate profits. We're taking half of that profit right now and purchasing put options because I'm expecting some serious volatility in the next few weeks. I don't think a U.S.-China trade deal gets done, and I think that Trump raises the tariffs higher. Also, the economic data is deteriorating. As you can see, the New York Fed is estimating Q2 GDP at 1. Last quarter, we were at 3.2, so that's a huge drop. This is a spokesperson for China on Twitter. President Trump said China wants to make a deal badly. I'd say yes, China wants a deal, but only want to make a fair deal. Comparing to accepting a deal Trump team wants to impose on China, sorry, we'd rather keep on the trade war, no matter how long it will last. From the Hill, President Trump on China tariffs. We're getting 25% on $250 billion. I can go up another at least $300 billion, and I'll do that at the right time. But I think China wants to make a deal badly. In other news, just trying to get a feel for the risk appetite in the stock market. Beyond Meat continues to soar. It's up some 34% today. It's ridiculous. All the fast food chains are using their meat now or starting to strike deals, so the perceived revenue of this company is going up quickly. So who knows, may have some serious revenue jumps from all of this action. On the Mexican tariff front, no news yet. It looks like Monday they will go to 5%. That shouldn't shock the markets, but if it goes to 10, 15, 20% each month it jumps, that could create a huge shock in the stock market. Everybody's trying to predict when the Fed will drop rates. And they hinted at it all week this week, which is why the stock market went jumping up higher. This little tweet notes that it does take about a month to create tariffs. So even though it goes into effect Monday, it may take a while to roll out. Now they're predicting July, a 50 basis point rate cut, which could send the TLT higher. Payroll was a dud, just like the ADP report yesterday. So a lot of deteriorating economic news. Not seeing the profit earning projections crash too hard yet. According to Bank of America, investors are extremely bearish with the bull and bear indicator plunging to 2.5, a fraction away from buy signal level of 2, which would mean people are too bearish. And equity investors are very bearish. Most hedged since January 3rd equity lows. Usually people react late to volatility. The weekly flow data suggests that $17.5 billion flew into bonds, second biggest week of inflows ever, offset by $10.3 billion out of equities. And so we've been seeing huge rush of equity capital fleeting to the bond market, yet stocks are near an all-time high. So that's definitely something you got to ask yourself, how is that possible? You can see a big spike in the negative delta regarding the hedging. Profits are about to go to a trough. The global PMI, highly correlated with global earnings per share, was at 49.8 in May. On the boom-bust border makes stocks a one-decision market. Sell if PMI heads towards 45 and buy if PMI heads towards 55, and it's definitely dropping for the last several weeks. However, providing a somewhat bullish take on this series is the ratio of orders and inventories, which leads the PMI by 2 months and has turned higher. At the same time, U.S.-China financial conditions are easing via liquidity, lower yields, lower oil, and assuming no material escalation of the trade war. Bank of America thinks that PMI troughs the next 3 months, resulting in a rebound in the earnings per share as well. So here's that PMI new order, which they're hoping is a leading indicator to say that we have some actual increases in earnings per share and PMI ahead. So we'll see if that really plays out. Most likely, if Trump starts getting loco with his tweets, that won't happen. But if they start to sound more and more like they're going to come to a deal, we might have a nice rally ahead of us with Fed about to lower rates next month. And again, that's also a big maybe. Monetary policy is already max bullish and exhibits clear parallels to the Shanghai Accord in 2016 ahead of the Osaka G20 meeting. So this is when people are hoping that Trump and Xi will meet and work out some sort of deal or extension in not escalating the trade war. But if you think about it, he has the election coming up, so he doesn't really have a lot of time to footsie around. So I am predicting that the tariffs rise and that things escalate by July, sometime in July. So that's why we're playing our 3 programs: the basic program Monday, Wednesday, Friday, the diamonds on Tuesday, and the whale on Thursday. We're playing it safe. I think we have a couple weeks of smooth sailing, and at that point, and at any point, we're going to see Trump surprise the market. And that's why we got to have those put options. So right now, the basic program and the whale program took half of the profit from our covered call and invested in a put option that has longer duration, so that we have this opportunity to profit from a shock to the downside. And most likely our diamond program will be rolling up the equity exposure to only Microsoft and Apple. And that will make it a little bit easier during a predicted volatile period to be able to roll out this strategy and not have to manage nearly as many positions. Now, right now, it's nice to have the diverse basket of 8 stocks and let them appreciate so quickly as we watch the volatility get smashed. We see all the CTAs flowing in and buying it up. It's like a big wave machine. The big money sees the wave, and now they can just add more water to it and push it. So I do expect we'll have at least another week or 2 of big upward movement until finally Trump spoils the party at some point with tariffs. Or China spoils the party with some sort of retaliation. So that's what I'm very concerned could happen. And that's why our strategy does well. If the market goes higher, great. If it goes flat, that's fine. If it goes down a little bit, we're okay. Right below that point is our vulnerability, and then below our put option, we get back into protected and profitable. Okay, so here's a look at the potential tariffs, as well as just a summary that there are rate cuts now in Malaysia, New Zealand, India, Philippines, and Australia, while the rest of the bigger banks have gone more and more dovish. The ECB, the Bank of England, the Bank of China, and the Fed. That's who is following those smaller countries now. So the entire world is expecting cuts, and this is all engineered by the tariffs with China. And so the summary of the Bank of American analysts' prediction is S&P 500 3,000 unless the trade war escalates. And of course, that's the big if, because they are projecting a upturn in the earnings per share of the companies. So we'll see if that really plays out. And at the same time, the Fed cutting Okay, so there's risk, the tariff man equals recession, of course. And then risk 2 is pointing out that he thinks that Trump is going to lay off on the tariffs because the unemployment has slowed down ever since they started imposing them. So we'll see. I don't think he's going to stand down, though. And then he's talking about the Fed losing its credibility by lowering rates right now. Could also be a potential risk. GOP worried about the tariffs in Mexico. Longview pointing out that retail is crushed and you can buy these, what they call cigar butts. That's Warren Buffett's teacher was one who would teach people to find good companies that have at least one good puff for a cheap price. Although Buffett did start to kind of get away from that mentality. Of course, his big position's Apple, so it's not anything like that. He went more to the moat. And that's one reason why I do like owning Apple and Microsoft in the Diamond Club exclusively once we get really worried about the stock market, which is coming up soon. We've got some powerhouses behind both of those two companies. The number 1 and number 2 position in the SPY and in the QQQ and in Berkshire and in most hedge funds. So there's a lot of support for those two companies, more so than any other stocks in the world. So we're really pushing our quality up to the top. VIX rising on call buying, just like in late January 2018. So the rate of change on the SPY was so fast to the upside, it actually pushed the VIX up. That's rare. Usually it goes down. Still unclear what's going to happen with tariffs. Here's some rants from Trump just a little while ago. If you want to pause and read it in detail, go for it. But general message is it's not clear yet. This is an article that's interesting, pointing out that the big war is going to be on the cables through the oceans, and that Huawei is now trying to get a piece of that market, which helps control the internet. And I also watched an interesting Bloomberg special just about the different internets developing around the world in Russia, China, all these private networks. Also in the news, FedEx dumps Amazon, will no longer provide quick shipping service. And at the same time, Amazon is announcing their little drones that will start delivering within months. So continuing to push the innovation and decrease the costs, as well as starting their own shipping business. They're actually giving you something like $15,000 if you'll start your own shipping company now. So FedEx is seeing them as some serious competition. Stocks climb on high hopes for rate cuts was the big headline this week. Consumer credit rose to $4.07 trillion as the credit continues to expand. U.S. banks fell on the prospects of a Fed rate cut, so that was the only part of our diamond portfolio that's only up a little bit since we went long on that. Here's a review of the tickers we're looking at in the basic program. Currently, we're long the SPY with covered call and a put option to protect to the downside. So we're writing a pretty lucrative covered call for income, but then reinvesting half of that credit to buy downside protection with the put option. So this gives us a wide range of opportunities to generate profit in 3 directions. The stocks in our Diamond membership did very well today, and that total portfolio jumped 3% since we told everyone to take off the covered call and just hold the equities. The Whale Club had some big jumps today in value, although our strategy is only trying to generate a safe 0.5% return by owning 100 shares of Amazon and Google, which costs around $300,000. So if we can pull that off with a very safe, high probability trade, that's an annualized return of 28%. And so with Amazon and Google jumping up day after we issued that trade alert, it's in very good shape going into the weekend. And again, it took half of its profit and also bought downside protection with put options. Extra tracking some of the IPOs this year just to get an idea for risk appetite. A lot of them have really been struggling, but they're staying alive, like Uber, Pinterest, and Lyft. Beyond Meat is just killing it, up 39% today alone. Trade War stocks are in the green. Look at the SPY at today's chart, 5-day chart, the 1-month chart. And again, this is a period where some of the action in the SPY to the upside actually pushed the volatility index higher, which is a very rare thing. Look at the SPY over the 5-year, going from 182 to 294. That's why we like to trade the SPY with covered calls. We know in the long run we have the best asset in the world. TLT had a little bit of a jump today from the bad jobs report, climbing from 124 to 132. This is what our whale club had traded for the past 6 months. We called it quits around 128, doing covered calls all year on that, and then switched over to Google and Amazon after they had crashed 10%. So we looked for the opportunity, and now we're switched over to trading Google and Amazon, 100 shares of each. Here's a look at the TLT over the last 10 years, and legendary hedge fund manager Drunken Miller is predicting we will push this up to that 143 level or even quite higher. In fact, if his prediction's true, we'll go much higher than that, as he thinks the treasury yield will go to 0 and bonds around the world will go negative. And he's all in on that trade after the tweet in May about Trump raising the tariffs. Here's a look at Apple. We told everyone to go long on June 4th, so you can see a big jump in this 5-day chart on Apple. Here's your 10-year look. Again, this is a great company to own for the long run, and that's why we enjoy selling covered calls against it. We don't have to worry about it disappearing one day. Bank of America had a nice jump, so we're still in the profit, even though it is not enjoying quite the same return as some of the techs. Comcast jumping $1 higher. Cisco jumping $5 higher, one of our best performers. Facebook jumping nearly $10. Microsoft climbing very rapidly this week, $12 higher. Wells Fargo jumping $2 higher. And in our whale club, of course, we're in a position where we're just trying to generate 0.5% a week safely with a lot of downside protection. These sold off with the general market, but they're also now being probed by the government for antitrust potential lawsuits. So we're playing this strategy very conservatively with an incredible amount of downside protection on these trades. And here's a look at Google, also jumping the day after we put on the trade, putting it into a great position. Here's a look at Beyond Meat today, going from 120 as high as 148. And that is a wrap for today's update video. If you want to upgrade your free trial because it expired or you're getting towards the end of your free trial, call Dean at 505-322-7515. He can save you $100 over the phone. The program, again, trades at noon Eastern, Monday, Wednesday, Friday, with written and video instructions. And you'll also get a 30-day free trial into our Diamond Club, which publishes on Tuesday at noon Eastern, and our Whale Club that trades on Thursday at noon Eastern. So you get the whole package for 30 days to decide what makes the most sense for you. So look for your next update Monday, and have a great weekend.